So Milton Friedman was the preeminent monetary theorist of his or any generation. He's the person who created the way we think about money in the world today. And his central argument regarding the Great Depression was that the Federal Reserve should have printed money. And he's got plenty of theoretical papers that back that up. So it's the claim that there's no theoretical basis for this approach to thinking about money and credit is simply false.
Look, we can, in a bank run, people they get scared, they run to the bank to pull out their money. We can let the whole financial system collapse. Or the Fed can print money, hand it to depositors, let them hold it for a second, the panic goes away, they redeposit the money in the bank, and we burn the money. Okay, if that's what we're going to debate, there's no debate here. The reason why we've gone there, instead of to $4 trillion sitting, $3 of the $4 trillion sitting in the bank unused, is because it's much more difficult to win a debate about whether this can create prosperity. If I stick a gun to my head and I say, I could kill myself, but I didn't. See, it creates prosperity. Okay? Yes, Milton Friedman was right. Okay? We did stupid stuff. We did stupid stuff in the 1930s that we all agree should not be repeated. What we want to debate today is whether or not, after that happens and we bail out the banks, can we, through radical monetary policy, quantitative easing, which has increased the monetary base from $800 billion to $4 trillion because the Fed didn't burn the money after the money was returned to the banking system. They tried to create prosperity that way. The question is whether or not it works.
Roger Bootle.
Yeah, you're spewing out all these numbers as though you're a central bank printing money. Actually, I think you completely misrepresented Bernanke's position. He has not recanted. The notion that he's given up on what he spent his life's work writing and doing is quite frankly absurd. What he meant by saying, if those were exactly the words he used, about central banks not being able to print prosperity, was exactly what I was talking about earlier on. That's to say the contrast between the real sources of economic growth and the notion that central banks can't change those things dramatically. Of course they can't conjure up massive amounts of technological progress or whatever. We all know that. That's not the issue. The issue is, are there times when the monetary and financial system is on the brink of collapse? Answer. Undoubtedly, yes. I'd like to know the answer. Undoubtedly, yes.
There's no
and
debate
then the
on
second
that
question
by
is, when those occasions happen, what do you think you should do? Sit there and do nothing?
No.
The answer is no.
So
you should print money.
Don't be silly. Of course not. You're setting up a straw man. So
Andrew Hussar.
So I was sitting there and I was money printing. So I mean, let me just tell you, I think we.
Bully for you.
I think we really need to be clear about what we're debating, because I think we could go on for half an hour to having this same debate. Are we talking about the first $1.75 trillion of Fed monetary policy, of quantitative easing, or are we talking about the whole kit and caboodle?
Why do we need